Wow, what a great week for interest rates. Got a nice extended rally. Really good week for home values as well. So, if anybody's ever taken a dance lesson before, you know that somebody has to lead. And it's the same in real estate. Our clients need us to lead them and to stay one step ahead and give them that guidance and advice before they even know that they need it. So, I'm going to run through a rate update with you, let you know where things are at right now, where they were, and where we're expecting things to go. Before I do, I want to point out one insight that I think is really important to know right now. We're seeing appraisals coming in. So prices are softening a little bit in some areas, but we're seeing appraisals coming in higher than the purchase price in a lot of cases. Just this last month in November, 3 times I had this happen where we were then able to go back after contracts were signed, get an addendum adding a seller concession, and do a 2-1 buy down for our clients. Some cases saving them $800, $1,000, even one case $1,300 per month. No risk to the buyers, no risk to the sellers. The appraisal's been done, commitments in. So this is a really important insight and something to always be thinking about, ways that we can help our clients out. It works for the sellers too, because now that sales price looks even better on paper. They'll still net the same amount, but on paper, the price is better and the buyer's benefiting tremendously from much lower interest rates. Now, on to what's been going on with today's rates. So we saw an end to the nice rally that we had going yesterday, but then again today we're seeing a really good move in rates. We got a unscheduled price improvement right now. Rates hovering right around that 7.1. This is down tremendously from just a couple of weeks ago. I mean, we don't want to really look back to last year, but we're starting to see more signs that rates have peaked out. And depending on who you listen to, you have a bunch of people in the Fed. Some of them are lawyers, some of them are economists. The economists are flat out right saying that as long as they see a couple of more months of good inflation reporting, there's absolutely no reason why they would not start cutting rates. The lawyers, however, they're talking more about higher for longer, and rates need to be restrictive in order to bring inflation back down to that target number, their goal of around 2%. Now, the truth is inflation is moving down. It has been moving down, and the Fed hiked so much, over 525 basis points. So the actual Fed funds rate is really around 5.3, 5.5. They could cut rates back by 125 to 150 basis points and still be in a restrictive stance. So the market thinks that the Fed is going to cut 100% by next June. There are signals that we could see rate cuts as early as February or March. We'll be keeping a really close eye next week on the jobs numbers, right? We know inflation's coming down. We're not really expecting too much to change there, but the unemployment is the thing that's been hurting rates and keeping them a little bit higher. That is going to be reported next week and could have a big move one way or the other in terms of this rally and how much lower we can see rates before the Fed even starts cutting them. Now, I want to talk to you real quickly about the end of the year and the next 30 days. We have a full 30 days here with some holidays in between where we can be planting seeds for 2024. Now, I'm going to take advantage because I know come January 1, there's going to be that surge. And if we take advantage right now, get into our database, talk to all of our closed clients, and really try and focus on talking to people that we haven't spoken to before, that's going to set us up for success in the first quarter, which otherwise could be kind of slow. So we have some things that can help you to target sellers and listings in specific areas and farms that you want to be working in, be sure, reply back to this email, send me a text. If you have a recently sold property in a market that you want to target more, or even if it's in the area that you're currently living or working in, we can get you over a qualified list of homeowners that are in that specific neighborhood, phone numbers, names, addresses, and emails, and just get some conversations started, right? 95% of them are not going to want to do anything right now, but the 5% will, and that other 95%, that's planting seeds for the future. Those are going to be people 2, 3, 5 years from now that are all going to be looking to move. The sooner that you can get in front of them and capitalize, the better it'll be all around. So real quick, thank you again to everybody this year for supporting my business, whether it's through leads and closings or on social media. That's really so much to me. That's why I'm doing these videos and trying to get the information out there, educate our clients on the market, on interest rates, on the loan programs available to them. Last thing, the new loan amounts for 2024 were just announced. In our area, you can finance up to $1.14 million on a conventional mortgage. The regular conforming limit is $766,550, but then on the high balance, because we're in a high cost area, you can go up to $1.149 million. Hope you have a great rest of your day. Have an awesome weekend. If anybody's around and needs help, just give me a call. Thank you.